Well, good morning or good afternoon, depending on where you're logging in from today to listen to this recording. I want to welcome to all of you and thank you for joining us. And at this time, TimeValue Software is pleased to present a webinar that's titled Mastering Time Value of Money Calculations with TValue Online Software. And my name is Chuck Miller, and my colleague for this presentation is Marty Pellerin. We've both been with TimeValue Software for a number of years. We both work on the product development side here mainly, and Marty comes from a background in finance. A little bit about TimeValue Software first, is we've been in the product development business for over 30 years, really specializing in developing software that grew out of an expertise that we have in time value of money calculations. And since TValue was first released, we've also come up with multiple product lines that are currently in use in about 100 different countries today. Now, the agenda for this webinar looks like this. We're going to start off with a quick calculation that'll give you a quick calculation in TValue Online that'll give you a good feel for kind of the flow of the software itself. Then from there, we'll dive a bit deeper into the options and functions to really give you a more detailed look at the features and even some of the administrative capabilities of TValue Online. After that, we're going to transition into some sample applications that'll put what we've learned into practical use. So with that, let's begin our tour of the TValue Online software. Now, first, when we go into TValue Online, we're going to have a login screen that we want to log in through. We'll go ahead and log in here. And then we'll see our main screen of TValue Online. And now for this quick tour, we're going to do just a basic payment calculation for, let's say, a $100,000 loan at 5% amortized over 10 years. So on a monthly payment. First off, the compounding field. This dictates how our interest is compounded in our particular calculations. It can be from daily to annually. And you'll notice on the desktop presentation or desktop system that we're using for this presentation, you'll notice that we have drop-down menus available when we're using it on that platform. Now, when you use TValue Online on a tablet or a smartphone, you'll have kind of custom menus and different keyboards that will optimize its use on your device. So it may appear differently depending on the device that you are using. Then from this compounding field, which we will leave as monthly, we'll move to the nominal annual rate, which is really representing the rate at which we want interest calculated, and it's generally the quoted rate on consumer and commercial loans. And we said for this example, we're going to have a 5% rate, so we'll type 5, and we'll tab through the label fields, an optional field that we'll just type tour on. Then when we come down to the cash flow lines, this first line is where we'll enter the information about our loans and payments on these cash flow lines here. Each cash flow line consists of an event that, along with corresponding dates and amounts, that TValue really makes its calculations based on this series of cash flow lines. So we're going to use the default event, which is loan. We'll use loan and we'll move through. We'll come to the date field, and for the date, it's just a 6-character date. We can type 10/1/17 and tab off. TValue will do the formatting for us. TValue offers some shortcuts as well to adjust this date. If we wanted to advance the date by a day or two, we can press the D key on our keyboard, and you'll notice the date advancing a day each time. And we can retreat that date back holding the Shift key down, pressing the same D key. The M key works the same for months, and the Y key will advance the year by each time you press it as well. So there's a couple little shortcuts. When we come to the amount field, there's also some shortcuts here. We mentioned that we had a $100,000 loan, which of course we could type in 100,000. But if we get to a lot of zeros and we're losing track of them, we can make it easy on ourselves and type 100K. And TValue will add the thousands for us. You can also use the H key for hundreds of thousands, the M key for millions, and the B key for billions. That makes it a little easier when you're inputting larger amounts. Come to the number, we have one loan, so we'll leave that as 1. When we tab through, it brings us down to the next event line, which we can see our event choices are limited now because we've already chose kind of the loan group, which is fine. We'll move through, we'll come to the payment date, which TValue has defaulted a month later for us. And then we come to the amount field, and this is the variable that we wanted to calculate. We wanted to determine what our payment amount was. And to do that in TValue, we designate the variable that we'd like to solve for by typing U on our keyboard, which will make it unknown. And we can have various fields as unknowns. We could also solve for a yield or the nominal annual rate, which would make this field the unknown. Our present value might be, our loan field would be the unknown, and if we're solving for a particular term, the number might be the unknown. So that unknown, typing U, is kind of a staple within TValue, very useful. Now we said we were amortizing this over 10 years, so of course we could type in, we could do the math and say 10 years of monthly payments is 120. Or we can have TValue do the math for us, and we can type in 12 in the letter Y. I'm sorry, I meant 10. We had 120 payments, so it was 10 years, so we can type 10 in the letter Y. There we go, I couldn't do the math myself. And we'll come through, and it defaults the period for us based on our compounding period. Okay, so with those facts there, now we can just go up and click on the Calculate button, and we can see that we now have our payment of 1060.66. It's that quick to do a payment calculation, and then if we click on the amortization schedule, you can now see the breakdown of that payment with interest and principal. So it's that's kind of the flow of the software, how you work through a particular calculation. And now that we've seen that, we're going to turn the controls over to Marty, who is going to circle back and start to look at the features of the product in detail. Marty?
Thank you, Sir Charles. So let's start covering the features and capabilities of TValue Online. First, I'm going to go ahead and start a new schedule here. And we'll just put a loan, I'm going to use 10, 30, 17, and we'll put 200K in. And we'll go ahead and put a payment and U for unknown. And we'll use 6% as a rate. And I'll just put mortgage up here. So we're going to start walking you through the different capabilities of the program. First, we're going to start with the More option. And please note, this is with the desktop version. If you're using it on a tablet or a smartphone, it's going to have same features, but they're going to be in different places. We'll start with Compute. We offer 4 different computation methods. The first one is normal, which is compound interest. Compound interest means that unpaid interest gets added to the balance, and then it gets compounded, and then you effectively get interest on interest calculation. U.S. rule is simple interest, no compounding, and when you have unpaid interest, it goes into accrued interest, and we'll show you that a little bit later. A lot of people ask us what the loan structure should be, and the reality is it's whatever people agree to. Normal amortization obviously would be the benefit of the lender if unpaid interest happens, but once again, if both loans are paid and interest is always satisfied, they will be exactly the same. We also offer Canadian. Canadian is a semi-annual or annual. It's primarily for Canadian mortgages. Most of them are semi-annual. Then for any odd days, you have a couple options also. We also offer Rule of 78. Rule of 78 is a method of allocating pre-computed interest to time periods. This is used in the leasing industry kind of for lower-end leases. It's also for consumer products that are depreciated like appliances and stuff like that. We offer 3 different year lengths. 365 is obviously the most common, that's what you would think of for consumer loans, for mortgages, auto loans, and stuff like that. 364 is for when you have like a weekly or bi-weekly type of computation. It's easy to divide the weeks into 364, so you have no odd days. Don't see it very often. I probably see it once a year, but is available. 360 is common for commercial loans. When you see an actual over 360, a 365 over 360, sometimes they even write it as a 360 over 365. This is the day length, so each calculation is based on a 360-day year. Also for bonds, most of your bond calculations are also based on 360-day year. Day counting, we do offer, let me flip this back to normal. We do offer a 30 over 360. This is a new calculation for our TValue products. This is the Eurobond method. There's actually 18 different variations of doing this type of calculation, but every month is 30 days, including March, including February. So the 31st disappears, and in February they add 2 more days to get the calculation. This is kind of a, I think, older calculation. It's done in the leasing industry. We've seen quite a bit of it, but it was done, I think, originally just to make manual calculations simple. We also can do whole dollars. If you want to get rid of the pennies, just click on this, and all the schedules here, if you save as your default, if you want to do all your schedules to say in US roll, click on US roll, save as default, so all future schedules will open that way, and that'll be your default going forward. Next, we'll talk about the input setup. The input setup, first of all, we have our default compounding. These are the periods Chuck showed you quickly. We offer 13 different compound methods. We do everything from daily, which is what the IRS does. Daily compounds the interest every single day. IRS does that even though we don't like it. So you get interest on interest on interest on interest. Exact days is a slightly different calculation. Exact days counts the number of days between events. For our commercial loan calculation, this is a setting that you do. So a 28-day month versus 30 versus 31 will count the interest separately. Monthly obviously is the most common for consumer loans. Quarterly, semi-annual are done in the leasing industry, and for bonds, annual for any type of annual investment that doesn't have other cash flows. And then we get into all the other options here. Once again, if you have these, if you do something a little bit different than monthly, you can save as default. If event names, we do offer custom event names. These are our defaults. You have a loan, you have a lease, you have an investment deposit. Once you start in one of these groups, you do stay in the group. So if you do a loan and you want to do a lease, and you start line 2 with a payment, you have to actually start over. This is the way it works. If you create any custom events, which I'll show you in a minute, you can actually see those on your event detail to work with. Date of second cash flow. This is payments in arrears. Once again, mostly consumer loans. If you're in the leasing industry and you have payments in advance, you might want to change the setting here so the line 2 is also the same date as line 1. So if your payment's on 10/1, if your lease is on 10/1, your payment would be on 10/1, and you'd set that as your default. Multiple loans. If you're doing a line of credit, I would uncheck that because you're going to have multiple loans. Otherwise, I'd keep that checked. So if you do make a mistake, it'll flag it and ask you if you really want to do it. Date format, this is our international date setting options. US, we do month, day, year, but Europe, Quebec, Australia, they do the day, month, year, so you can set that and set that as your default. Also, we can do the commas versus, or periods versus the commas for the fraction separator. Next, let's talk about the event names. Event names has 4 different groups. You can add groups too. We used to only have 3 names, but now you can actually have 5 names, and each of the names can have up to 30 characters. And what this allows you to do is be able to categorize different topics or different descriptions, and that'll go on your amortization schedule in different headings. So it's real nice. So you can create as much as you want. Like I said, you're allowed only 30 characters, but you can get pretty creative here. You want to include in the event list, which is what I showed you before, and you want to save for new documents once you create those names. But you can add up to 5 events and up to 30 characters per event. Special series, Chuck is going to take us through special series and show you the different options. I like to call this a creative financing portion of the program. It allows you to do some pretty neat things, and Chuck will do that in a lot of detail. Loan details, if you're doing any type of APR calculation and you have points, prepaid interest, or closing costs, this is where you would put it. Let's go ahead and put 1 point. We can put 2 days. This will take us to from the 30th to the 1st. And we'll put $1,000 in here. And $1,000 would be the closing costs that are part of the calculation, the APR. Hit OK. And now this date, I'm going to go ahead and change it 2 days. So I'm going to go to the 1st. And the 2 days is actually from 10:30 would go to 11:30. So we're going to count the number of days to get to our calculation. And now we're going to go to calculate. I'll put some numbers in here. Put you here, 6%, calculate. And we'll go to the amortization schedule. You go to the amortization schedule. If you do want to see the APR calculation, just hit include there, and we'll go ahead and APR is going to go on the bottom of your schedule. This actually got customized a little bit. Oh, I'm sorry. Let me back up real quick. Cash flow data. I only had one. Change this to 360. Always put you back in. Calculate. Payments are $11.99. Now, if you go to the amortization schedule, sorry about that. You'll see here is our cash flow data. And if you scroll all the way to the bottom, you'll see the truth in lending disclosure boxes. And our APR is actually 6.14, not 6, because of that 1 point prepaid interest and closing costs. Then we have our finance charges, amount financed, and total payments. Let's go across the program now. We talked about the compounding periods. We offer 13 different compound methods. Always generally that ties to the cash flow. So if you have monthly cash flows, probably monthly or exact days. A nominal rate, we offer 4 different interest rates. They're all sisters of each other. The nominal rate is generally the quoted rate. The effective rate is the effective compounding. So we have monthly compounding. So this rate's going to have a little bit higher rate at 6.168. We also have the periodic rate. The periodic rate is the nominal rate divided by the periods. So it'd be 12 or 6 divided by 12, which would be 0.5. Then the daily rate is the nominal rate divided by the year, 365, which would be the 0.016. Here we have the label. That's what goes, how you save your files generally. We also offer the ability to put a text information that prints out on the top of the amortization schedule. I can put this is a test, and this will actually print on the top of the schedule. If you're doing something that someone else is going to look at and they want to know what you did or how you did it, we recommend this for banks and credit unions that do trouble debt restructuring. They can put a note there as far as what kind of deal they did and what kind of allowance they have. And then when the examiners and CPAs come in 9 months later, they don't have to remember it because they can just say, look at the schedule, here's my notes. So it's very handy to have. We talked about the rate change. Chuck showed you that. The rate change is an option that allows you to change your rate midterm during the loan. The nominal rate is the interest rate that'll be on the first day, and if you change the rate during the term, you can go ahead and hit rate change. It'll back it up to the end date, and then once you any subsequent cash flows will be at the new rate. And Chuck will show you how to do that a little bit later. Another neat feature we have when we change this back to 11/30 is the lock date. And the lock date, if you right-click on the date, let's say you want your payments to be on the 30th of every month versus the end of the month. So if you right now, if we did it on 11/30, it would jump to 12/31, 1/31, etc. But if we want the payments to always be on the 30th, we can right-click, go to the end by the 30th, so every single payment will be on the 30th, obviously, except for February. The memo field is a nice new feature too. You can actually put a memo in the individual line items, and it'll print out on the amortization schedule. So you have like a first and last month payment, or if you want to put a check number or anything like that. It's actually our most common requested for new features. So if you do want to put on separate line items here, you can hit the expand button. Expand button will open up the loan, and you can put your memo on any individual line item, which is great. You can also, in the expand mode, you can change the dates. You can change the amount. So if you're tracking a loan, you get irregular payments in, you can actually change the information here, and the program will re-amortize itself automatically. So that is a great feature within the program. If you want to compress it before you go to the amortization schedule, if you leave it like this, it'll spread the loan out for your both your cash flow data and your amortization. You do want to compress it, it'll bring back everything that's common. Also, sort works very similar. Let's say that you are managing a loan, and I said, okay, someone misses a payment. I could go ahead and hit 0. And what that's going to do now is going to bring up my rounding. If I hit calculate, and rounding gives me 6 different options. It tells me my loan is not fully amortized, and it tells me what the balance is, and it tells me what it would be as of the end of the loan. But I have 6 options. I can make it a last payment, so it's going to take that amount and put it into the last payment, so I'll add it to the $1199.10. I can do a first loan, so if I'm doing a present value or net present value calculation, I wanted to take the balance and put it into the loan line, we can do that. We can create a balloon. Let's say there's 360 payments. We want to make this into the 361st payment. We can go ahead and do that, and what that'll do is also add interest for one more payment. We can put it in specific lines. So let's say we say, okay, you missed a payment, you got to catch up on line 8. I go ahead and put line 8 here, hit OK, and it's going to calculate the additional amount for basically 2 payments plus interest. Another option is, let's say this loan's going to bounce around. They're not going to make a catch-up payment. They're going to make another payment, and it's going to bounce around. I really don't want to reconcile it. I can hit open balance, and it'll keep it open, and that number will just fluctuate as payments are being made. I can also expense it. Let's say there's $1 left at the end, and I don't want to deal with it. I could go ahead and expense it, and it'll expense it to interest. That's the 6 options on rounding. Let me show you another one. Let's say that you're working with somebody and they miss a payment and they say, I need to catch up. And you say, okay, how many months do you need to catch up? They said, how about 3 months? I can go ahead and put 3 for the next 3 payments, and then it'll get us back on track. I can hit calculate, and now my payments are, say, about $1,600. And they say, well, that's fine, but I really can't handle that. What if I do 4 months? This is when TValue becomes a great what-if tool. And go ahead and put you on for unknown for the next 4 months, hit calculate, and that'll tell me that my payments are going to be $1,500 a month, roughly, until I catch up, and then I'll be back on track and do $11.99 thereafter. A couple other features in the program. The balance. Balance is a neat feature. The balance allows you to determine a balance at any point in time. This is real easy to do for payoffs, or a time for a balance. So let me do that. So let's say our payments are all on the 1st, and I want to do a per diem interest. So I can put in, let's say, 01/02/19 and get balance. And what it'll do now is it'll give me the balance of that amount, of that loan. And it'll also tell me what the principal was as of the last payment, and it's going to tell me what the interim interest is. So if I'm working with somebody and I'm trying to do a payoff, and they say, okay, if I don't pay it off today, what's the deal tomorrow? I said, well, every day is going to cost you $32.40. So as of 1/2, it's this amount, and then keep adding the amount. So it's a neat little tool to do what-if type of calculations and to do interim interest calculation. The other option is, let's say I have this $200,000 loan, and for whatever reason I want to know about when it gets to $150,000. I can put $150K here, and now I can go to date, clear that and then get date. And now it's going to tell me that the date when the balance is approximately, oops, there we go. The date when it's approximately $150,000 would be 7/1/2031. So this is a nice little feature to do. And finally, the totals. Totals gives me what the totals are. Easy reference if I need to quickly reference it. It tells me what the APR, interest, loan, etc. So that's the features and capabilities. I'll turn it back over to Chuck, and he'll take us to the next phase.
Yeah, and as Marty was going through the options on the More button, he mentioned the special series. So let's take a look at what that means within TValue. Let's set up just a simple loan. Let's calculate the payment again on, let's say, a $90,000 loan at 5%. And as you've seen within TValue, we can just enter in that basic information for such a calculation. We'll say this was $100,000, or I think we said $90,000. And we'll make our payment amount unknown, and we said for 60 months, so 5 years. And we click calculate, and there we see our payment amount calculated at $1,698. So TValue is fantastic for generating these regular series of payments that occur at regular intervals, for that same amount. But in the real world, we also know that all series of payments and withdrawals aren't all this regular. And that's where TValue Online is able to recognize just that reality with what we call those special series. So if I have a particular payment line selected, or if I'm on a particular payment amount, I can go up to the More on the ribbon, and I can select special series. But what I can also do is on that particular payment line, I can go to the column, the special series column, and just click on that column. And what I see now are the special series that are available to me, where I can now create kind of what are described as a regular series of irregular cash flows. And Marty called this the creative financing tool within TValue, which is a great description for it. So let's take a look at the different options within this and what these special series would mean to us. First off, you select the type of series that you wish to generate by clicking on the appropriate tab. And then we activate a series by clicking on the Activate button within that particular series. So we have the normal series here, first off, which is really the most common type of payment that you're going to see in consumer loans. And the payments for a normal series are applied first towards any outstanding interest balance, and then that remainder of that payment is then applied to reducing the principal balance, kind of the normal way that it works on consumer loans. If we then look at the next tab, we see interest only, which will generate payments that are equal to the amount of interest that has accrued since the last event. So if we activate this series, it says see the schedule for our amount. So let's take a look at that schedule itself. If we come over and we click on the amortization, and we'll see a payment. Well, first off, we'll see the rounding, because it's telling us here that, hey, you've paid nothing down in the principal, so all that balance is still remaining there at $90,000 because we've only been making interest payments. So we're going to leave that as an open balance that we can deal with later. We'll click OK, and now we see the schedule, and we see a payment amount of $375, and what that's representing is the interest that's accruing each period. So nothing is, there's no part of the payment that's reducing the principal balance, so that's remaining at $90,000. Now what you'll often see is an interest-only balance combined then, or transitioning to then just a normal payment that will then start to reduce the principal. Very common, so you can do that combination in TValue as well. Okay, let's continue on with our special series. We can see the next one is a fixed principal plus interest series that will generate payments where there's a specified or a fixed amount anyway that's applied to principal, and then TValue will calculate the amount of interest that's required to cover the accrued interest since that last event. So you can either enter an amount in here for the principal amount that you're specifying, or you can have TValue solve for that as well. So either way will work for it. And then the existing fixed series is kind of a sister to the fixed principal plus interest in that it can be used to value an existing stream of fixed principal plus interest amounts. Okay, then on that back row that when I click on becomes the front row, we can see the next is a principal first, which is fairly self-explanatory, the title that is, in that it's used to generate cash flows that are applied first towards principal, even though there may be outstanding interest. And so if we activate that series, and we'll have TValue solve for the amount of our total payment. And if we click OK, we'll see a message comes up that shows a little intelligence built into TValue that says, hey, when you use the principal first series, you need to be in US rule, which is really the simple interest method within TValue Online. And that allows any unpaid interests to just accrue on the schedule. And since we're making a principal first payment, that is going to occur since we have an interest rate entered as well. So we're going to say yes. So we can see down in the lower left corner of our screen now, it says US rule no compounding. So it's indicating that that's the compute method being used now. So let's calculate our payment amount, which comes to $1,671. But let's look at the schedule, which is going to be a bit different now. It has some additional columns now to account for the accrued interest that's occurring. So we could see our payment of $1,671 here, and we could see all that entire payment is going towards principal in the principal paid column. Then we have the interest accrued, which is showing in the interest accrued column, but none of it is being paid. Or no interest is being paid by the particular payment, at least at this point. And that interest in that interest accrued column is now being added up, or accrued, if you will, in the interest column under the balance group. So those extra columns kind of help account for the amounts when you're dealing with an interest, or when you're dealing with a simple interest or US rule loan. Let's go back to our cash flow and look at the special series once again. And the remaining special series, we can see we have amount step and percent step, which really demonstrate the flexibility that TValue gives us for structuring creative cash flows. And these series will generate cash flows that increase or decrease by a fixed dollar amount that you can specify here, or by a fixed percentage amount after a certain number of payments that you can specify. So for instance, the percent step is great for factoring in an inflation factor into perhaps a series of payments. So very powerful series that you can use, that TValue can generate for us. The last two remaining series available to us deal with generating payments that have regular skips along the way. So a skip series here can help you generate payments that are regularly skipped for intervals other than monthly, whereas monthly, obviously true to its name, will create those same payments, or will create payments where certain months are regularly skipped throughout all or part of the term. So it's real applicable, for instance, when you're structuring a loan that is taking into account some seasonal cash flows for, let's say, a teacher who may have some lean summer months that we can say, hey, we want to skip these months. Or we could, for a farmer who may have some lean winter months. So if we say, hey, we want to skip December, February, and January, and during those months we don't want any payment required. Those of you in leasing may have a kind of a base payment that you might call a contact payment that you could enter in that amount for those skipped months. But we want TValue to calculate the payment amount for the remaining months to factor in that zero payment. Let's take a look at what that looks like. First off, we see monthly skip is shown there, and if we click on calculate, TValue will come up with a payment amount of $22.71 that if we look at the amortization schedule, we can see that's the amount of the payment on the months that, of course, aren't skipped, but then here's our zero payment shown on the amortization schedule, and that zero payment recurs throughout the term of our loan. So that $22.71 is taking into account those missed payments, if you will, or zero payments on those months. So a real powerful feature of those special series. Okay, once we're now that we're in the amortization schedule, we finished all the special series. Let's take a look at a couple of the items within the schedule itself. First off, we are using Google Chrome, which the browser that we're using to launch TValue Online, and we do recommend using Google Chrome when you're using TValue Online. They play together very well, and reason I mention that is because if you're using a different browser, sometimes for instance, the print ready PDF option will behave differently. So I just want to mention that, hey, depending on the browser you're using, some things may behave differently a bit. But within Google Chrome, you can click on the print ready PDF. It'll create that PDF for you that you can print out very, very easily. Email PDF, it will create that PDF as well and email it to whatever recipient. However, if you leave, and in addition to sending it out to the recipient that you name here, it'll also include a copy back to yourself, whatever email you logged in with. So if you just want to send an email to yourself, just leave this to field empty and click OK, and it'll send that message to you, which is an easy way to just get an email or a scheduled email to you, a PDF email to you. The include option up on the ribbon just gives you a chance or the ability to determine what items are included on your report, whether it's simple things like date and time or the frequency of your totals, or perhaps even the APR Reg Z disclosure at the end. So you just select the items that you'd like included on your report. The format option is similar to what we just saw for the layout, in that you can select different components of the report to include on your report itself. For instance, you can see in the background behind this window, you can see the cash flow data on our amortization schedule. That's because we have that showing on the report, but we could deselect that if we didn't want that included. You can select page breaks as well between the different components of the report. This also allows you to include headers and footers and modify templates for those footers and headers as well. Then if we came over to the far right and we click on the More button, and this has changed since Marty clicked on that when we were in the cash flow, we can see that we can set the we can set a year end if we wanted to deal with a fiscal year rather than a December calendar year end. And also, if you just wanted to display a portion of the report, we can do that within the report range, or we can specify a date range to just then show us that portion of the report itself, of the schedule itself, I should say. And that's handy when you're dealing with an exceptionally large schedule and you just like to include perhaps a portion of it, send that off to a client, maybe include that in a Word document, which leads me to the next feature of the reporting within TValue Online. Are the buttons up on the toolbar here where you can click on the Word button up on the ribbon, and that will open up a Word document and put the contents of the amortization schedule right into that Word document. You can do the same with the Excel button there that will put it into a nicely formatted Excel spreadsheet. However, if you just wanted the contents, just kind of the numbers, if you will, you can click on the CSV option, and that will also give you the ability to use that within Excel as well. Okay, and we went through the report setup and the printing. And now let's go and take a look at the options that TValue Online gives us for opening and saving files. So let's go back to our cash flow. And once again, we do recommend that you're using Google Chrome when you're using TValue Online, and that will, I say that because some things will differ in what you'll see when you go to open and save files, or just the options that are available to you. So to create a new schedule or to open and save a file within TValue Online, you click on this File button, and on the resulting menu, you'll see that we have options for opening and saving TValue schedules. If you're running TValue Online from any mobile or desktop device, or of course while we're running it on a desktop here, you'll be able to save and retrieve files in the cloud from our secure Amazon servers, which these second and third options on this menu allow us to do. And you'll have the option to save in whatever file or whatever folder structure you have. So you can save it to your just your personal folder, or if you had a company share folder, within that company share folder, I could have the different folders for each of the users of TValue Online. Depending on however you have your folder structure set up, you can add and remove folders from this same window. Now, if you're using TValue Online from a standard laptop or desktop computer like we're doing here, you will also have the option to save files locally on your computer, which is the open locally, download, and save locally options. Now, keep in mind that with each browser handling the downloads differently, you'll want to make sure that you know where your downloads are going if you're using the Save Locally option. And what I mean by that is in Google Chrome, if we went to the settings and scroll all the way down to go to the advanced settings, we'll come to a section called downloads, and this is how we would detect or how we would find out where Google Chrome is putting our downloaded TValue Online files. So each browser is going to handle this differently, but it's a good thing to know. So if you do download files, you know where they're going. So let's go back to TValue Online here. And also within that file menu, you have the ability to email a TValue schedule from within TValue Online as well. And the content, when you email a document from here versus the emailing the PDF, is this will email a live, or I should say, a live TValue document. So it's going to be in either a version 5 or a version 6 format, depending on which you select. And so just keep in mind that when you send a file to a user or to a recipient this way, they will need TValue in order to open this particular file. Okay, next, let's look at the account button that gives us access to the administrative tools within TValue Online. And that's on the far right of the ribbon up at the top, or of the title bar. And within the panel here, within the account panel, for general users of the software, you'll have the ability to do things such as changing your password, changing your email, logging in or logging out. If you, of course, forget your password, you'll be able to, on the login, be able to retrieve that password. Now, if you're the administrator of TValue Online, you'll have access to the management panel. So if we went to Manage Company Users, the management panel that comes up will allow us to kind of dictate the authorization of users within TValue Online, as well as give them the ability to change, remove, or add, or give us the ability to change, remove, or add new TValue Online users. We do recommend that you keep the top options selected, which basically says, hey, only the company administrator can set the defaults within TValue Online. This is very handy just for consistency within your firm, defaults such as event names. So if you're in a leasing firm and you want everybody to use leasing as the event group, that would be the main default. So we do encourage you to leave that selected. Also, as an administrator, you'll be able to control the cloud storage of TValue Online files. And the last option here, this last checkbox, this comes in handy if in your environment you're having trouble emailing TValue Online files, or maybe they're getting hung up on a spam folder, because this option will remove any reference to the cloud services in that email and usually allows them to go through freely. So just keep that in mind if you're having any issues. See down at the bottom, we have the list of current users. One thing, if we click on the edit for the one user that's shown in there, this gives us the ability to establish or change the folder permissions for the individual users. That's kind of handy if we want to give them free reign or just access to particular folders. Also down in the list of current user information, we'll also see the usage report that we can download and also the last login date. These are both useful items in that they let you gauge the usage of the product and find out which users perhaps have not yet logged in, that you can notify that they have the ability to use TValue Online. And then the number of personal files, this comes in handy if you have perhaps an employee who may be leaving and they have a large number of personal files. You kind of want to know that they may need to be transferred so they're can be used by another employee. So just kind of gives you a little extra management tool there. Then a couple extra items in this panel. Up at the top, we have the TValue Online resource page. When we click on this, this is very handy, and it'll go, first off, it'll go to the TimeValue software website, but it'll give you access to some very useful videos that go into detail into some of the items. Well, go into detail, much more detail than even what Marty and I did in today's presentation. Really help you get the most from your TValue Online subscription. So just keep that in mind when you're using TValue Online. Oops, okay. And then one more item on that panel is the TValue Online overview video. This is very useful for first-time users of TValue Online. It kind of gives them an overview of the product itself. Okay, this concludes our in-depth look at the functions of the TValue Online software, and next we get to put the pieces together by using TValue Online in some common examples, kind of our favorite part of the presentation. So the way we're going to handle this is, first we're going to show you kind of a list of the assumptions that we will use for the presentation, or for the example that we're going to be calculating. And the way we'll do that is like this. Let's see. For instance, our first example that we'll run through is an adjustable rate loan. And we're going to have a loan amount of $200,000 that we amortize over 30 years, or 360 months, at 5%. Then we're going to have a rate change after 24 months that bumps up to 6%. And then we'd like to calculate what the balloon payment is after 10 years. So let's take a look at how we accomplish that in TValue Online. Okay, we'll start a new document. And we set our payments were monthly, so in this case we're going to leave our compounding period as monthly. Our rate starts out at 5%, and we'll just put this label in as a reminder. We have a loan that we're going to start on 10/1/17, and our loan amount was $200,000. And we want to calculate payments that are amortized over 30 years. So we'll type 30Y. Whoops. Oh, actually, we're solving for our payment amount. So that's going to be our unknown, excuse me. Then when we get to the number field, we'll type 30Y for the term. Now when we click on calculate, we'll see our payment amount of 1073. Amortized over that 30 years. But if we work chronologically through the assumptions, we said after 24 months we're going to have a rate change. So we'll type 24, we'll come down to the next line, and we'll select rate change for our event. And when we move through the line, our date adjusts back so we don't get a month's worth of interest between the last date in that series of 24 payments. And we'll put in our new rate of 6%. And then we'll continue our payments again. And we're going to re-amortize those payments using that new rate over the remaining term, which is 336 payments. Now when we calculate that, we can see our payment slightly is bumped up a bit to $11.93. And to finish this off, we said after a total of 120 payments, so 24 payments plus 96 payments will give us a total of 120. And then we wanted to solve for a balloon payment. Now we don't want a month's worth of interest between the end date on line 4, which is 10/1/2027. So we're going to move our date on line 5 back 1 month. We'll just do Shift M and moves it back. And then we're going to solve for that payment amount. That's going to be our balloon, if you will. And we'll calculate. And we see our payment amount is $166,522 to pay this off. And if we look at the amortization of this, what we'll see is our payment of $1,073 for the first 2 years. And then after our rate change of 6%, our payment goes up to $1,193. That continues all the way through to our balloon payment of $166,522 down at the bottom. Oftentimes you'll see multiple rate changes when you're doing an adjustable rate calculation, which you can handle just the same way in TValue. Just continue through adding your additional rates. Okay, that's our first live example, and for the remainder, I'm going to turn this controls back over to Marty.
Thanks, Chuck. So we're going to do a bunch of calculations, show you different capabilities of the program, and different ways that you can use TValue. So first, let's do a present value calculation. Present value calculation is very common in business for settlement type of offers. You do a net present value calculation. In the note industry, when you're buying or selling notes, you can do a present value calculation. The banks, when they do trouble debt restructuring, they have to do a net present value to determine the allowance amount. If you are in the banking or credit union industry, we have done a webinar on this topic. We have a 4-step process of doing TDRs. If you're interested, just email us at info@TimeValue, put attention Marty, and say I'd like to get the webinars on TDRs. And also the new lease accounting regulations require you to do a net present value calculation. So let me show you how to do one. So let's assume we have a college savings fund and we're going to start it. Our child is born. We want to do, we're going to do a settlement offer. Excuse me. So we're going to do a settlement offer. Let's say we have $100,000 earnings power and salary, and we have a 2% inflation rate. We have 20 years of earning power, and we're going to have an interest rate of 5%, and we're going to figure out how much that roughly $2 million is worth today. We'll jump back over to TValue. So we said we have annual cash flows, so we're going to do annual compounding. We said we're going to have a 5% interest rate. We're going to do a present value, PV. And whenever you do a present value calculation, you're going to put U on the first line, present, today. You do a future value, U goes on the last line, in the future. And we only have one. And now we're going to put our cash flows in. And you can change the terminology of what you call it, but effectively, whether you call it a loan, investment, deposit, calculations will all be the same. And we'll put 100K in, and we're going to put 20, and it's going to give us annual. Since our compounding is annual, our period will be annual. And now we're going to access our special series because we said we're going to have a 2% inflation rate. I'll click over here, go to percent step, hit 2. And it'll be once a year. That's our payment structure. Hit OK, and we have 100,000 over 20 years with 2% inflation at 5%, and that is worth $1.4 million today. So whenever you do a present value calculation, you put in your future cash flows, put in your discount rate, put U on the first line to solve for that. Let's do a future value calculation. Future value calculations are real common to do any type of savings. You can do retirement planning, college savings, or savings goal for vacation or a long-term plan or house improvement or anything like that. So let's do a college savings. Let's assume our child is born and we want to start saving for college, and we have 20 years to save for it. And we want to start with $100 a month, and we're going to increase it $25 every 2 years, and we're looking at a 6% annual rate. So our cash flows are going to be monthly. We said we're looking at a 6% annual rate. I'll call this future value. And we're going to do an investment. And we're going to do, excuse me, clear this. We're going to do $100, and we're going to do it for 20 years. We're going to do 240 payments. And once again, we're going to use our special series. We said we're going to increase it $25 every 2 years. That would be a amount step. Put $25 here, and every 24th payment, hit OK. And now if we go to line 2, it's going to default to 20 years later. And put U on the last line, future value, calculate, and we have $87,000. And said, well, that's great, but that's really not enough. What if I start at $125? This is when TValue becomes a great tool to do what-if calculations. I can go ahead and put U back in here, calculate, and now I get $99,000. I said, well, I'm thinking more of 150. I need 150 in 20 years. So let me go ahead and put that in here. And I'll put U back in as my starting point, calculate, and I'll need basically $235, assuming I put in $25 more every 2 years. So very simple to do. Once again, on future value, you're generally solving for the last number, and you put in your cash flows and your return rate. A lot of us do leases. People lease cars and people lease equipment. Very simple to do in TValue. TValue is actually a great leasing tool to do pricing. We actually have done a couple webinars on this topic also. One on basic deal structuring for leases and one on advanced. If you're interested in either one of those webinars or both of them, once again, send an email to Marty or info@TimeValue, put attention Marty, and say I'd like to get the 2 webinars on leasing. So let's have a kind of a classic lease, $50,000, interest rate's 10%, term is 60 months or 5 years. We're going to have 2 payments in advance. That's real common in leasing. And then we'll have a buyout or a residual of $5,000 and figure out what our lease payments are. So we're going to said we have a 10% rate. We're going to have monthly cash flows. We'll do a lease. And I'm going to go ahead and hit lease here because I like the terminology that I have options on. That's already pre-built into the program. And we're going to put $50,000 for a lease, 50K. And go to line 2, and it's going to say lease payment on 10/15. Well, we said 2 payments in advance. I showed you our default settings. We can actually change that to have payments in advance versus payments in arrears. But I'll go ahead and hit Shift M because that's very simple to do. This is where TValue can actually solve for 2 variables at a time. I can put 2x. I like to call this the x factor. I can use 1.5x, 3x. And this effectively would be my first and last payment. I could actually put that in my memo 2. I wanted to note that. And we'll go ahead and do the next payment, which is a month later. We're going to put U for unknown. We said we had 60 payments. We did first and last up front. So we have 58 remaining payments. Then we'll go to line 4. And this payment is actually already made. So I'm going to hit R for residual. I'm going to hit M for month to bring it to the 60th payment and put in my final payment, which is $5,000. Calculate. And my payments are $981 and my first and last is $1963. So once again, pretty straightforward to do. Let's say you have you're going to get a lease, and they say we don't have an interest rate on the lease, we have a rate factor. And you say, okay, I understand that, and I understand what a rate factor is, and I have TValue, so I know I can figure out what the imputed interest rate or the yield is on the deal. So let's go ahead and show you how to do that. So I'm going to use this same model since it's pretty close to the same. We're going to go ahead and say, okay, our rate factor was 0.020. And what that means is you take your rate factor for your regular payments times the lease amount. And that happens to be $1,000. And yes, I did make it easy. And then our first and last would be twice that, $2,000. And my imputed interest rate is going to be 10.75. So basically all we did is we put in our cash flows and we solved for the nominal rate. And the cash flows were based upon the rate factor for the regular payment amount. A lot of people use Excel to do the internal rate of return calculation. It's actually really easy to do in TValue. It's just a matter of the settings. So let's do something really simple. A lot of people use internal rate of return for investing, looking at their portfolio or investments and stuff like that. They want to figure out what they're actually making on the deal. So let's say we have an investment of $1 million on January 1st, 2017, and 1 year later we have $1.2 million. And we look at that and say, that's a very easy calculation to do. I can do that in my head. So let's show you how to do it in TValue. So the key to doing internal rate of return is the settings. You're going to set it for daily compounding. You're going to solve for the interest rate, internal rate of return. And I'll go ahead and put 010117, 1M for millions, 010118, 1.2M. And then I look at that and I say, that's 20%. That's too easy. I'll hit calculate, and TValue says the nominal annual rate is 18.2. But we actually want to use the effective annual rate. So the settings, what I told you was the key. Settings is daily compounding. Put in your cash flows, and then use your effective annual rate, and that's your internal rate of return. And if you're going to send this schedule to somebody, what I would do is go to the amortization schedule, and instead of include, I would change the nominal annual rate to the effective rate and put that on your schedule, and that way they'll see the 20% on your schedule. Next thing I want to talk about is TValue is an excellent tool for auditing. Our CPA market is our largest market, and I know they use it for both tax and audit. But if you ever get an Excel schedule and you look at it and you wanted to verify the calculations, this is a great line that I read once. It says Excel does not guarantee excellence. So we use Excel. It's an excellent program, but it is based upon writing formulas. It's also based on copying and pasting formulas. And we get calls all the time where they said, I got my Excel schedule and TValue doesn't look right. And my comment to them generally is, I'd say it politely, is I think TValue is right and Excel is wrong, and 100% of the time that is the case. The reason is TValue is calculations are error-free because they're based on algorithms and algorithms. So if you put a few dates and amounts in, your calculations are going to be clean. It's quick and easy to use, as we showed you. It handles irregular payments, as we showed you. Easy to do what-ifs. Does the simple to complex. You basically can put anything into the program, it'll calculate for you. And it prepares a very detailed amortization schedule, professionally looking. And with your TValue Online subscription, you get unlimited support. So if you ever need any help, feel free to give us a call, and we'll be happy to help you out. So I'm going to turn this back over to Chuck, and we'll have a few more things to do to close the presentation.
Okay. Let's see, that does cover the TValue Online. At the beginning, well, actually there's a couple items I wanted to cover with you. At the beginning of the presentation, I did mention that Time Value Software had additional products that it had developed in addition to TValue over the years. We do have a new version of our desktop application, TValue 6, and then the TValue engine. If you're doing any development with time value money calculations, it's really the calculation engine of TValue is available for that. If you do any interest and penalty calculations, or even on the payroll side, if you're dealing with failure to deposit penalties, we have software that help you save on interest and penalties there and verify those calculations. File and time, useful tool if you do any, if you need any assistance in kind of controlling the workload in your office, or keeping track of it, if you will. Making sure things don't slip through the cracks. That's what File and Time is great for. And TCalc is an excellent product that they're single function calculators that really add valuable content to your website and keep your customers coming back again and again. Now, those of you who may be watching this webinar who do not yet have a subscription to TValue Online, it is a $60 per year subscription per user. And that includes any updates or upgrades, which are obviously updated live for you, access to just some great training resources, and of course, unlimited technical support. We always help you get the most from your product as well when you call or email for support. So thank you very much for watching the presentation today. And we do, once again, if you ever have any questions on TValue Online or if we can be of any assistance, never hesitate to reach out to us via email or phone. Thank you very much.